Hello traders and welcome to another video review. Today is Wednesday, December 27th, 2023. Let's find out what's in the economic calendar for today. As you can see, we got only 3 days of trading left in 2023, so we shouldn't expect too many very important data releases just before the end of the year. So from the Asian session, we got the data from Japan, construction orders and housing starts. Then we got some expectations, ZEW expectations from Switzerland, scheduled for release at 10 a.m. A little bit later, we got data from the USA in form of the Red Book. Those data are scheduled for release 5 to 3 o'clock. And at the end of the US session, we got Richmond Manufacturing Index and Richmond Manufacturing Shipments together with the Services Index. We got index of the Dallas Fed Services Revenues and the Texas Services Sector Outlook. At the 3 hours later, we got 5-year note auction, and then of course 30 minutes after 10 o'clock, we got the API weekly crude oil stock data. So as you can see, not too many very important data releases. Apparently, only one medium important is a 5-year note auction from the US. So let's just do the review of the majors. We are starting with euro dollar. Euro dollar 4-hour chart has broken above the last swing high located at 110.18 and made a new swing high at 1.1050. The reason for that is the cup and handle pattern on the 4-hour chart that had been completed. So we have the cup here, we have this nice candle here as a fractal of the potential bigger cup. So we got the cup and handle as a handle formation and then breakout to the upside. So potential double top right now is invalidated, and what is even more interesting, 61% of the Fibonacci retracement was invalidated as well, because the market has broke above it as well. So the next target for the euro dollar is located way higher. Let me just find out the daily time frame chart so I can show you guys the next target. Potentially the next target is 1.1062, and then there is one at 1.1150, and the ultimate target is of course the swing high 1.1276. So it looks like this movement to the upside is rather more bullish than it was before, because we got the bears had the chance to push the prices lower when they first time hit the 61% Fibonacci retracement around the 1.10 level, right? Then retraced like 50%, but then there's a bounce and a potential cup and a handle pattern that was actually completed and terminated as well. So right now we should wait for another higher prices. 1.1047, 1.1150 and 1.1276 are the next target for the euro dollar. For the British pound, the situation is a little bit less optimistic, because we didn't yet broke above the last swing high. So if we come and see the current situation on the British pound, it's easy to notice that the recent movement to the upside has not been yet completed. However, the market doesn't actually looks like it's worried about it and keeps moving higher, step by step, a little by a little. We are now testing the short-term trend line, but the momentum is now around the level of 1.27, let's say 27.32. Right, this is the trend line that we are testing, but the momentum is not that keen to rally higher. Current level is 57 points on the momentum, so it's still positive, right? But it's not that very strong. It's not even over the level of 60, which is why the current situation looks like we are not actually moving up anytime soon. it looks like the British pound would likely stay in the same trading zone. Lows of the zone are, of course, the technical support roughly between 1.2611, 1.2602. So this situation is still being reflected by that candle. So that arrow here. Okay, so the potential movement to the downside if the trend line is not violated. This arrow indicates a potential swing high test. However, please notice that it's only possible when the level of 1.2744 is clearly violated. So the situation on the British pound is still not that much clear whatsoever, and the market is moving up and down, still below the trend line. Let's switch to the US dollar, to the Japanese yen. That market is moving lower. It's moving lower after the 2023 high was established at 151.79. Since then, as you can see, very dynamic reversal to the downside has happened. Let's just take a look at the recent developments on this market. Very sharp and dynamic movements to the downside are really key feature of this market these days. Recent low 141 point let me just take the magnet, 140.98. That's the recent technical support. Of course, the recent technical resistance is this level here, roughly around 144.96, and there is a very nice zone made by this movement to the upside, 144.75, 144.95. So this is 20 pips zone, of course. And this is the supply zone. No breakout to the upside, no breakout to the upside if there is no breakout of this level as well. So let me just indicate this level. I just need my my arrows. Arrow down would be perfect. There you go. So this is the key level for the US dollar to Japanese yen. We are kind of trading above the 50 periods moving average, but we are not trading above the 100 periods moving average. So this is a very nice indicator of the bearish trend strength. Right now the momentum jumps from the level of 37 towards the level of 50, but we didn't actually broke above any of the significant level just yet. Intraday technical resistance is located at 142.82, and the intraday technical support is located roughly around 141.89. So we got about the 100 pips between the technical resistance and the technical support. So this is the outlook for the US dollar to Japanese yen. Let's take a look at the US dollar to the Canadian dollar. So this is clearly a downtrend. This downtrend, as you can see, has made a very nice bullish divergence. It's visible on the 4-hour chart. Let's switch to daily, and we can see that the US dollar to Canadian dollar is moving down like a stone. Next target 1.3091. This is the key technical support, and as far as I can see, it's the low of the 2023. Yes, this is the 2023 low. It might be hit during the next few days, but most likely we are going to test it, but maybe in the beginning of the 2024 or something like this. The recent low was made, let me just take a look, the recent low was made at 1.3184, so we need roughly around 100 pips to test the key technical support here. As you can see, very steep movement to the downside on the US dollar to the Canadian dollar. So all of the majors are looking very bearish these days. Key technical resistance that was tested before, so the market recognized it, is at 1.3380, and without a breakout above this technical resistance, we cannot say that the market is resuming the potential uptrend. Moreover, despite the fact that we are on a daily time frame chart extremely oversold. The market conditions are extremely oversold. Now the reading of the RSI is 23 points. The market doesn't indicate any kind of clues, any kind of signals that it wants to reverse this very, very strong sell-off. So no reverse or trend termination confirmation has been issued by the market participant yet. We need to wait for more data, more trading days, and the next target is still located at the yearly low 1.3090. So please notice this movement to the downside. And last but not least, let's just find out what the Bitcoin is doing. And this is daily time frame chart. Let's just switch to the 4-hour time frame chart, and you can see clearly that the Bitcoin is not that keen to move anywhere higher than the last swing high at 44,517. It keeps trading below this very narrow. There you go. This is of course the supply zone. As you can see, two very thick red lines, and just recently we went lower to make a local low, another local low, roughly around 41,587. Market is trying to bounce, but as you can see, this is the classical example of the Bitcoin market, which is apparently right now moving up and down as the volatility is apparently decreasing. Only a sustained breakout below 40,165 down towards the 39,824 would indicate a potential, let's say, confirmation of the yearly top and then bigger correction. For now, the market simply lacks the volatility, keeps moving up and down, or it's not moving too much at all. The daily movement of 0.5% up to 1% is something normal for the Bitcoin, but no big moves has been made in at least in the last week. So right now, steady on the Bitcoin, not so bearish, not so bullish whatsoever. Nevertheless, the market is still under the control of the bulls, because there is a very big uptrend in the background on the Bitcoin. So please notice the fact that any breakout above the supply zone would establish new swing high for this year, maybe even new swing high for the new year 2024 and for the January for sure. So as long as we trade above these technical supports, the outlook remains bullish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and